Alright guys, we are now heading towards the proper chapter. Shall we start the chapter? Okay. Before we start our chapter, let us first learn the names of Ind AS. What we will do, we learn every day, we learn few names of Ind AS, and not only learn, we will write it at some place. Okay. So I need 2 pages for writing the name of Ind AS, number and Ind AS names and number. For 2 pages, please uh, start with writing the names. Even you can write in your basic part also. Matlab just whatever the basics for you, you have left 7 pages now. Huh? In continuation of that, you can also write. Don't worry. In continuation of that. Okay. So 7 plus 2, matlab 9 pages now you need. In continuation of that last point, what was our last item? Format of Soki, na? Now after that, we are writing the names of Ind AS. Every day we will write. We need at least 2 pages or maybe 3 pages for writing all the names, and the remaining pages leave for the basics. Okay. So Ind AS names and numbers. Ind AS names and numbers. Ind AS 1. Presentation of financial statements. Presentation of financial statements. Ind AS 2. Valuation of inventories. Valuation of inventories. Ind AS 7. 3, 4, 5, 6 deleted. There is no 3, 4, 5, 6. Ind AS 7. Statement of cash flows. Statement of cash flows. Eight, 9 deleted. Ind AS, sorry, 9 deleted. There is 8. Ind AS 8. Accounting policies. Changes in accounting estimates and errors. This is similar to AS5. Accounting policies, changes in accounting estimates and errors. Ind AS 10. Events occurring after the reporting period. Events occurring after the reporting period. Tell me. Please read it loudly. Ind AS 1. Ind AS 2. Ind AS 7, Ind AS 8, counting estimates and errors. Ind AS 10. Okay. Ind AS 12. Income taxes. Ind AS 12. Income taxes. Ind AS 16. Property, plant and equipment. 12 income taxes, 16 property, plant and equipment, 19 employee benefits, just like AS 15. See, enter. Employee benefits. Ind AS 20. Accounting for government grants and disclosure of government assistance. Okay. For today, 9 Ind AS names and numbers. We'll continue tomorrow. We'll continue this series. Okay. 9. Tell me. Ind AS 1. Ind AS 2. Valuation of inventories. Ind AS 7. Ind AS 8. Policies, changes in accounting estimates and errors. Ind AS 10. Events occurring after the reporting period. Ind AS 12. Income taxes. Ind AS 16. Ind AS 19. Ind AS 20. Grants and disclosure of government assistance. Done? Fine? Okay. I will also leave few pages for this series. If any basics are required, I will use further pages. Okay? Fine. Now guys, let me tell you that we are going to start our first chapter, which is Ind AS 102, share based payments. What is the name? Share based payments. Ind AS 102. Right now, as far as face-to-face students are concerned, you have got or you may receive the first book, which is this compiler book. You may have received the first compiler book. Okay? And the first book, the practical example book. Okay? Practical example book. Now, let me show you about these books. This is basically the question bank compiler. So how I have designed this book? In this book, first of all the subtopics are differently categorized. Like basic level questions are categorized in series 100. Questions relating to equity settled transactions, all questions at one place for this topic at series 200. Like I have made the index for each and every topic. Okay, so basic questions series 100 means series 100 means 102 question number. This is question number. This is Ind AS 102. The SM means study mat, ICI SM, and 101 means question number 101. Now question number 101 I took from ICI mat. Then question number 102. So this is a 100 series. 100 series start with question number 101. Understood or not? So question number 101, 102, 103. Now 103. What is the question? Question Ind AS 102. This is my coding only. RMP. RMP means RTP mock test paper PYQ. So this question is taken from any RMP. So this came in the RTP this, MTP this, MTP this. So this is not a ICI module question. So whenever you look at SM, that means you are covering your ICI module. When you will look like this, it's a RTP, MTP or PYQ question. Understood or not? There is another code called OM. OM means other material. Very few selected questions, very good questions. I covered some other material questions like Singapore Sea Institute question taken directly from IFRS. Some question I have taken from ACCA level questions, like which I lied actually. These are very few questions. 15-20 questions I took, which I found that very relevant for our study purpose also. Understood kya? That is called OM, other material. Or it could be my own example also. Like I have created one master question and put it in the compiler, master question. So that is called OM. Now the questions are categorized in the index form. Basic question 100 series, equity settled transaction question 200 series. In 200 series we have 9 number of questions. In 100 series we have 4 questions. So in this overall chapter we have 29 questions. Now understood? Anna? So that way we are covering each and every chapter. Every chapter you will find index. This index will help you. How it will help you? Tell me how it will help you. Suppose you want to cover this chapter. Now how it will help you? Tell me. Suppose at the time of exam, you have 2 days, 3 days, 4 days left. And you know that you are perfect in this chapter. Only one particular topic question you can't, you don't have enough practice or you don't have enough confidence. So particular, maybe that could be the repricing modification. So you directly go to that particular series, practice those questions and that's it. You don't need to find each and every topic, every question. It's not mixing. Like I need to find where is the modification question. Where is the modification question? You don't need to find, like modification question start in this page of 17.24. Directly you will get all questions of the same category. So all question at same category will save your time ultimately. Understood or not? Or it may, like for IBS paper, it will also save your time because the index is prepared. So for IBS also, this will work. Understood kya? Okay. Now last, technically this QR is not useful for you. This is useful for Hindi batch students because this QR is basically for those who can understand Hindi. Like this QR is, if you will scan it from Google Lens or any app, even the camera app, if you will scan it, you will get the video solution of this question for exam purpose. But right now, this is for those students who can understand Hindi because my most of the batches in Hindi, my very few batches are in English. So in future, I will definitely try my best to give you that particular PDF also or another book also. Don't worry for that another book. I won't charge you. If possible, I will definitely give you that particular question bank which is in English QR. But that is not commitment from my side. I will try my best, I'm saying. Okay. So this QR is for that particular QR video solutions only. Okay. Guys, have you understood this now? Now coming to the example book. Now this is the example book. Like in Ind AS 102, practical example 1, their solution. Example 2, example 3, and that's it. So what is this? This is my own created example which I will use in the class. So I want to save the time of writing simply. Just to save the time of writing and to focus more on understanding, discussion. I am giving you this book, but that doesn't necessary that I will not give you another examples. Maybe I may have to give you few more examples. We will write it down. Guys, are you understanding or not? Okay, fine. Now, other than that, I hope now you are understanding that we should have two copies. One copy is of conceptual writing, which you are using right now for the basics also, and the different copy for the practicing of questions. Anna? Now you have two copies, or you are still with the one copy only right now? Two copies. Have you arranged? If someone has not arranged, please tomorrow onwards at least arrange it. Okay. Today you need to manage with the one copy. Okay. Okay. So, acha, one more. This is the concept book. This is a color coded concept book. This is a color coded concept book. Wherever the important items are there, this is the different table, kind of table. Wherever the entries are required, the entries are there for understanding the concept. Wherever the calculation is required, how to calculate, the format is already there, that we will do this in this format. Okay, this is the complete conceptual book. But as I told you, we will write each and everything in our own language. It will be useful for retention. Okay, so the concept book I will give you, don't worry. Anna, right now it is not available because it is under printing stage, but we will focus more on our own writing part. Maybe then this book will not required for your exams. Only one material should be there from start to end, and that is your own handwritten material. So you are going to make your own book now, Anna. So you are going to make your own book. So be ready for writing and all. Don't take take it seriously. Okay, because you have to use your own notes only. Okay. Our first chapter is Ind AS 102. This is share based payments. This is share based payments. It has a weightage of 5 to 8 marks in descriptive. We are not talking about any MCQ. MCQ always comes with 2 marks. Any chapter, 2 marks, or two questions of 2 marks. So in descriptive, it may come as a 5 mark question, 6 mark question, 7 mark question, 8 mark question. Share based payment. Okay. So let's focus on understanding first. Guys, share based payment, very simple. Any payment you are making to someone in the form of share is called share based payment. What I said, any payment you are making to someone in the form of shares, your own company share, mind it, not any other company share. Suppose you have the Reliance company share and you purchased one asset and you are making payment to the vendor, those Reliance company share, that is not basically the share based payment. Understood or not? Share based payment means you are issuing own shares. So I purchase the asset from you, I am making the payment in shares. This is called share based payment transaction. This is a share based payment transaction or share based transaction. Understood or not? Okay. I am giving you coaching service. You issued me your company's share. This is a, like, you are getting service, and against that service you are giving me consideration in the form of, so for you it is a share based payment transaction. So share based payment, where we can make this payment any kind of transaction. Na, I am purchasing goods, share based payment. I am getting service, share based payment. I am getting employee service. I am getting, you are my employee, I will give you ESOPs. ESOPs, share based payment. ESOP is a share based payment. Understood or not? Logically, entire ESOP is covered here. Actually, we are going to understand the ESOP accounting. Got it or not? So for share based payment, now let us divide two different parties. Let us divide overall parties in two different forms. One, the employees. One is whatever payment I will do in the form of shares to my employees, it is ESOP and share based payment. And other is other than employees, like my suppliers, service providers. Are you guys understanding or not? Suppliers, service providers, and whatever. I am purchasing asset from you guys. I am purchasing goods from you. I am taking any service from you, maintenance service from you, and I am issuing my share. Again, it is share based payment. So this chapter covers both payments. Payment to major focus on 99% focus on ESOP. It is a ESOP based chapter. Very less focus on supplier. Why? Because for supplier there is no accounting required. Simple. The goods purchase entry is there and payment entry is there. Because for ESOP so many things are required. Now you guys understood or not? Fine. Another one. If I am not making any payment directly in the form of share, suppose they are my employees and I told them, after your continuous 3 years service, I will not give you shares. I will give you cash. But that cash value will be derived from the value of my share. I will not give you. I will give you. But the cash value will be derived from. Again, it is a share based payment. Then also it is a. So share based payment doesn't cover only payment in shares. It covers payment in. But the cash is based on the value of the share. It is also share based payment. Now this form of transaction where I will give cash, this is only for employees. This is not for suppliers. Understood or not? Now, if I will issue shares to my employees, is it a share based payment? ESOPs. If I will give cash to my employees, but the cash value shall be derived from the value of the share, it is share based payment? Yes, but the name is stock appreciation right, SAR. Stock appreciation right. So there are two different things. One is ESOP, one is SAR. ESOP and SAR. SAR. It is SAR. So there are two things. One is ESOPs. What is ESOPs? Not the full form. What is ESOP? Issuing shares. What is SAR? Not the full form. Payment in cash to the employees based on the share value. So we are going to understand the accounting of ESOP as well as accounting of SAR. Understood? Now, few more things, because I am giving you the just overview of this chapter. So accounting of ESOP is the one part. Accounting of SAR is the another part. Now, third part. Few of my employees, I have given them option. You want ESOP or SAR? It's up to you. You choose. But after 3 years. First work for me for 3 years, then you choose. Tell me, understood or not? It is ESOP with cash alternative. What is that? ESOP with, in simple language, equity settlement with cash alternative. So we will going to understand the accounting of this part also. 3 parts covered. What are 3 parts? ESOP, STAR, ESOP with cash alternate. Understood or not? Fourth part. Still the scope is there. Fourth part. I gave you ESOPs. But there was a condition of 3 years that I will give you after 3 years. I will issue the after 3 years. First you need to serve the company. First you need to serve the company. Then I will give you after 3 years ESOPs. And there were some initial conditions. After 1 year, I have make some modifications in this ESOP. I have make some modifications. And because of such modifications, the accounting will be changed completely. The fourth part we need to understand. What is that? Modification, also known as repricing. Also known as, like initially I told you that I will give you shares at a concessional price of 80 rupees. Concessional price of after 3 years. But after 1 year, I reduce the price. I make it more attractive offer. Now I'm after 1 year, I'm saying ki not 80 rupees, I will give you at 50 rupees. That is called modification accounting. We will understand. Tell me which one, what are the scopes? ESOPs accounting, SAR accounting, ESOP with cash alternative accounting, modification accounting. Understood? Fifth part, cancellation accounting. I announced ESOP, but after some time I cancelled. I said I won't give you. I won't give you. The cancellation accounting we will understand. As soon as I said I won't give you, you will ask me compensation. Technically you will ask me compensation. Because as an employee, you were there for ESOP. Looking at ESOP, you were serving me, na? So if I'm denying, then you have the full right to ask me. So compensation. So in cancellation, there is a compensation part actually. So accounting, understood or not? And last but not the least, ESOP announced by parent company for the subsidiary employees. What is it? ESOP issued by parent company for, or vice versa. ESOP issued by subsidiary company for parent company employee. This is the accounting. So whole chapter cover these things. Understood or not? I think this is a completely new chapter for you. You haven't read it in CA Inter. In CA Inter, this was not there. And deliberately, actually, I'm starting this chapter. I'm not starting from inventory, PPE. These are, we know that we have already read. I know that if I will start with this, you will remember them frequently. But actually, I want some new start actually. And not a boringness, because when I will start with Ind AS 2 and all, it will make you some boringness also. So we'll start with 102, a pure practical topic, completely practical chapter. Okay, and a very good marks weightage, 5 to 8 marks weightage, fully practical. Understood? Okay. So we now understood the scope of this chapter. And now, since you have understood the scope of this chapter, now you can definitely read the parts. Second is equity settled transaction, means ESOP. Third is means SAR. Fourth is understood. Fifth is, sixth is, seventh is understood now. So this is the scope of our chapter. Yes. Okay guys, listen to me. Today, suppose today is 1st April 2026. Today, on 1st April 26, I announced ESOP for my employees. Acha, first of all, na, we will let's focus on employees accounting only. We will focus on suppliers at the last of this chapter. Because supplier part is not relevant much. Okay. Okay. So today on 1st April 26, I announced ESOP. Today's date. So we will name it as grant date. Huh? Grant date means offer date. I offered. I offered ESOP. I offered SAR. What is grant date? Offer date. Understood? Second, on grant date, I told you that you need to first work for 3 years. Then only you will be eligible for ESOP. Right now you are not. You are just entitled. You have been just offered. Understood or not? First, complete the 3-year service. Don't leave the company. Is this a condition? Yes. This is called wasting condition. This is called VEST. This is called wasting condition. Understood or not? This is called waste. Any condition which is required to be fulfilled by employees to become eligible. Any condition which is required to be fulfilled by to become eligible for what? Or for SAR is called vesting condition. Understood, guys, or not? Vesting condition could be a service condition. Service means service period. Serve me 2 years, serve me 3 years, 4 years, 5 years, 1 year. That is called service condition. Wasting condition could be performance condition. Performance targets. Yes, performance. Like for next 3 years, your job, because you are a CEO of a company, CFO of a company, the performance condition usually given to higher level management. Normal employees won't get any performance condition. Normal employees will need to fulfill any service condition only. Are you understand? Normal employees need to fulfill only performance condition is for the top management employees, CFO level, CEO level employees. So that CFO got the offer with a performance condition that in next 3 years the company's net profit ratio should be increased by minimum 5%. That condition will definitely be given to the top management na yaar. What normal employee will do with this? Are you understanding or not? So performance condition, net profit ratio, production cost. You are the production head, मान लो, है ना? Production head, performance, any sort of performance condition you need to fulfill. Now tell me, for fulfilling the performance condition, ultimately you need to serve. So service condition is inbuilt. Inbuilt. Understood or not? So wasting condition could be service or performance. We will further divide into few more parts, but don't worry. First of all, listen to me very carefully. Okay, what is grant date? Offer date. What is wasting condition? That condition had to be fulfilled by employee to become eligible for ESOP. Okay. The third concept is wasting date. Wasting? Guess, any guess? The date when you have fulfilled the condition. The date when you have fulfilled the condition. That becomes the wasting date. Now suppose you fulfilled the condition on 31st March 29. What was the grant date in my example? 1st April 26. And what is the wasting date? 31st March 29. Tell me, how much period is this? It becomes wasting period. Wasting period. 4 terms we have understood. First, wasting condition. Wasting? Third. Wasting date. When you will be eligible. On wasting date you will be eligible. Fourth, wasting period. 4 conditions are there, 4 terms are there. Fifth, exercise price. Fifth is simply the offer price. I will give you the shares at 80 rupees. What is that? Exercise price. That means the concessional price. Are you guys understanding or not? That is called exercise price. In my example, what was the grant date? 1st April 26. What was the vesting date? 31st March 29. When you will become eligible? 31st March 29. Suppose you become eligible on 31st March 20. Company mailed you. Company have mail to all the employees that congratulations, you are now eligible for the ESOP. Now we are giving you 6 months time to decide whether you want our shares or not. If you want our shares, this is our bank detail. Give us 80 rupees as per the number of shares. 80 rupees per share. Suppose you guys are eligible for 10,000 shares each. 5,000 shares each. 1,000 shares each. So this is our bank details. First of all, make the payment of that amount. Then we will allot you the shares. Understood or not? How much time I have given you? This is called exercise period. Exercise. So when the exercise period will start? After vesting period. After, simply. Understood or not? Okay, tell me, how many terms are there overall? 5, 6 terms. First, grant date. Second, vesting condition. Vesting date. Vesting period. Exercise price and exercise period. Guys, understood or not? Okay, great. This Ind AS 102 covers all sort of share-based payments, as I told you. Covers except right issue. You understood right issue? Except if suppose you are my employee. At the time you are already a shareholder. There could be my shareholder employee, na? Now suppose if company issues a right issue. Huh? Company announce right issue for all shareholders, including employee shareholders also. Now, if I'm making right issue to my employee shareholder, that is not share-based payment. So, right issue is the exception. Are they understood or not? Second exception, and very logical exception. I told that this Ind AS covers all sort of share-based payments, except, and second, except making payment in the form of shares against acquisition of any business. Are holding subsidiary, amalgamations. If I acquire your company and I am issuing shares, it is also a share-based payment, na? But its accounting is different in different Ind AS. Understood or not? Very logical. So 2 exceptions are there. One right issue and one business acquisition simply. Business acquisition. Making payments against business acquisition. Understood or not? Very good. Okay, very good. Okay, whatever we have discussed, can we write it first? Okay. Okay, first point. The short name is SBP. SBP, share-based payment. I will use short words. SBP means any payment made to employees or suppliers oblique service providers, either in the form of own equity shares either in the form of own equity shares. You understood? Own, company's own share. Either in the form of own equity shares or in cash, but cash value, cash value is derived from own equity shares. Understood? SBP means any payment made to employees or suppliers in the form of either shares or cash, but the cash value should be derived from the own shares. Clear? Now, one exception. Sorry, two exceptions. Exceptions. Ind AS 102 does not cover the accounting of number one, right issue of shares to employees. Shares issued for acquiring business. For acquiring business. Shares issued are for acquiring business. These two are not covered. Done? Okay. Important definitions. Important definitions. Tell me, what are the definition? What was the first one? Grant date. What is the grant date? Offer date. Simply when the company announced offer. When company announced ESOP or SAR. Company announced ESOP or SAR. Okay, what is the next one? Wasting conditions. Wasting conditions. Yes, what was the wasting condition? Condition to be fulfilled by employees, है ना? Any condition which are required to be fulfilled by employees. Fulfilled by employees. Any condition which are required to be fulfilled by employees to become eligible for ESOP oblique SAR. Third, wasting date. What is wasting date? Date when condition is fulfilled. When conditions are fulfilled and employees become eligible. Okay, next. Vesting period. Yes, you tell. The time period between grant date to vesting date. Between grant date to vesting date. Next was exercise price. Oh, sorry. Exercise price. Yes. Exercise price. Offer price at which the shares will be issued. Offer price at which share will be issued. Next. Exercise period. From vesting date to exercise period basically starts after vesting date. After vesting period or vesting date. For what purpose? A time period given to exercise the option. है ना? Time period which starts after vesting date to exercise the offer. One last term, G. One last term, fair value of option. First of all, let us understand why I am calling it option. What is the full form of the ESOP? Employee stock option plan. So what is the option basically? It is a right. It is at the discretion, correct? I have given you the offer. It's up to you. If you don't want, then leave it. So it's an option for you. You want it, you take it. You don't want, leave it. So option means a right. Now, now, I offered you that I will give you my company's share, rough working. Please don't write. I will give you the company's share. I will give you 1,000 number of shares whose market price right now is 500 rupees. But I am giving you EP. EP means this one. I will give you at just 180. At how much? 180. But against which you need to fulfill some conditions. 2-3 years performance service, whatever. Okay. So this is the offer for you. Give me service. I'll give you shares at concession price. Simple deal. When I will give you? After 3 years. You understood the offer. Now I would instead use the word option, not offer. So you understood my option. What is the option? fulfill the conditions and get your shares at 180. Right now the price is. So what I want from your side? Service. I want one service, and again I want two things: service and 180 rupees. Okay, what you will give, you will get at concessional price. So now I want to value this offer. Value. What is the value of this overall offer? Means option. You suggest what is the value of this offer? Prima facie, it looks like 320 rupees. Value of this offer. See, you are paying 180 rupees. But other than 180, you got the discount, huh? And I'm giving you discount. So from my company's point of view, how much value I'm providing to you? 180 to I'm getting na. How much value I'm providing to you? So prima facie, it seems 320 is the value of the offer. But not always. Why? I have considered the today's market price, na. But I will give you the shares after the market price after 3 years could be more than 500, or so value could be more than 320 or less than 320 na yaar. Prima facie 320, it's fine. Just to understand. But actually the value is not 320. It could be more or less. So how to create this value? How to how to calculate this value? That is not our business. The value is to be calculated as per Black and Scholes model in AFM. Accounts will not teach you how to calculate this value. Accounts will just tell you that this is the value you need to take for accounting. Yes, for calculating this value, the expert will consider what elements? Today's price, number of years, fluctuations, past trend, and the RBI interest rate. Why? Because your expectations, your minimum expectation of return. So the expert will consider all these elements and will calculate an estimated fair value. So you will learn it in which subject? It's not my business. Understood? In our chapter, institute will give you the fair value. In accounts in FR, they will not ask you to calculate fair value. They will give you the fair value. In AFM, there's a model called Black and Scholes model, and there are so many different models which will be applied for calculating the fair value. Have you understood now? So please define what is the fair value of the option. Fair value of option, can I say in a simple words, fair value of the offer? In simple words, what is fair value of option? The market value of the offer we provided to the employees, based on depending upon the share price. The market price means share price, exercise price, and conditions. Period. Understood or not? So write it down. Acha, fair value of option and market price of share both are same? May or may not. Generally different. Why? Market price is the share price and fair value is the offer value. Because out of market price 500 rupees, I am getting 180 rupees na. So offer is for the remaining point, na? So fair value of option means fair value of the whole offer provided to employees, and it depends, nahin, it and its value depends on some factors. What are the factors? Market price per share, the one factor. The exercise price, the wasting period, and condition, interest rate of market. So this value is derived from these factors. Understood or not? In this chapter, the fair value of the option will be given to you. So note, I will try to write all the notes in red pen. You don't use red pen because red pen is not allowed for your exams. I'm using different pen. You can also use like blue and black, okay, but red pen, please do not use red pen. I will use that because I need to print these entire notes. What I will do, once the batch will be completed, I will print the entire notes and make a book of these notes. So I will want to use the different colors for the printing purpose. Understood or not? Or suppose if student want that PDF, want to print that, so I will definitely give the entire PDF, because some student may not have prepared the notes properly, so I will give the entire PDF for the printing purpose. So for printing purpose I'm using different colors. Okay, note, fair value of option will always be given in the question. Simple. Fair value of the option will always be given in the question. Alright guys, important definition. Now third point. Third point. So what is our first scope? You remember? ESOP. Now we call it equity settled transactions. What do we call it? Equity settled transaction. What do you mean by equity settled transaction? Equity settled transaction means when we are making the share based payment in the form of, matlab the settlement would be only in the form of settlement. I will settle this deal between you and me. What was the deal? What was the offer? Serve for 3 years. Array, fulfill the condition. Give me 180 rupees. I will give you share. I will settle this deal in equity shares. So it becomes an equity settled transaction. So the another name of ESOP is equity settled transaction, where the settlement will only be done in the equity form. Let's check your common sense, accounting common sense. In the previous lecture, we understood, here some student have also answered, liability is different and equity is different. You remember? One is owner based, one is outsider based. Fixed amount, obligation, fixed amount, liability. And for equity, there is no fixed obligation. Tell me, your common sense, tell me, equity settled transaction, is it a liability for company or it is the equity oriented nature? It is a liability or it is a equity? Liability. It is a liability or equity? Equity. Why liability? But not in the form of cash, na? Obligation to pay in the form of shares. Obligation to pay in the form of, I don't have any obligation to pay in cash. I will give you shares. Not fixed amount, fixed number of shares. Amount I won't, amount I'm not concerned, I don't have any concern about amount. I will give you that much share. Then the share value becomes more lesser. I don't have any risk. Your risk. Tell me, is it a liability of mine or equity of mine? Are company, from company's point of view, it's a equity. See, for you it's an asset. It's an asset for you. Don't think from your point of view. Don't think from employee point of view. Yaar. You are going to get the shares, na? This account, this here in Ind AS 102, we are doing accounting of company. So think from company's point of view. Okay, let me give you few more examples of liability and equity. Simple. Example number 1. I have a fixed obligation to pay you 5 lakh rupees cash. What is this? Simple. I have fixed obligation to give you 5 lakh rupees, but I will give you that number of shares which will cover your 5 lakh rupees. You understood? Suppose I took a loan from a bank, loan of 5 lakh. Either I will give you cash, liability. Second situation, I will give you my company's own equity share, but definitely that will cover the value of 5 lakh rupees. Guys, it's still a liability. Even though I am making payment in the form of, but it is still a, why? Obligation is fixed. Whatever I am going to settle, it is fixed settlement. Understood or not? Now, wait. I have taken a loan from you 5 lakh rupees. Wait. I have taken a loan from you 5 lakh rupees. I told you that after 5 years, I will give you in return, repayment, as a repayment, I will issue 10,000 fixed number of equity shares. 10,000 means 10,000. Not less than 10,000, not more than 10,000. And you agreed, I will give you 10,000 shares after 5 years as a repayment of this 5 lakh. Now, at the time of repayment, this 10,000 share market value, I don't know. And I don't have any concern about this. This 10,000 share market value could be 1 crore. This 10,000 share market value could be 1 rupee. But you need to accept the 10,000 shares only. Tell me. It is equity. It is not a liability. Why? My obligation is not to settle 5 lakh rupees. My obligation is to give the shares. Shares are fixed. This is equity transaction. This is not a, now little bit understood or not? Whatever I am teaching you right now is based on a particular Ind AS which is called financial instrument. You remember Ind AS 32, 107, 109. The definition is derived from that chapter, the definition of equity. Have you understood this thing? You understood three situations? So if I want to settle the fixed amount of obligation, that is my liability. But the settlement will be in the form of shares. Now, in the form of shares. So in the form of shares, there are two situations. Situation one, variable number of shares. Variable number of shares to settle exact 5 lakh rupees. Number of shares will be depending upon the day and price. Suppose after 5 years, I need to settle 5 lakh rupees now. After 5 years, the market price one share becomes 50 rupees. Tell me number of shares. Calculate how many number of shares. 5 lakh rupees, because I need to settle 5 lakh now. Use a calculator, guys. 5 lakh divided by 50. How many shares I need to issue? Changing the situation. After 5 years, the share value becomes 75 rupees. Now use the calculator. It's an account subject and you are not using calculator. 6666. Yeah, 6667. Okay. In my first situation, how many shares I was about to give you? In my second situation, so totally the number of shares are variable. I don't know at this time how many number of shares I need to give you. That depends on future market price. It is a liability because I don't know now how many number of shares I need to issue. I don't know how many number of shares I need to issue. So it's my liability. But from now, changing the situation, from day one, I know I will give you 10,000 shares, irrespective of market price. From day one, I know I need to issue just 10,000 shares. After 1 year, I know I need to issue 10,000 shares. After 2 years, 10,000. After 3 years, 10,000. Share is fixed. It is my equity settled transaction, irrespective of 5 lakh settlement is made or not. Understood? Great. Now, based on this discussion, see, this entire discussion came from Ind AS, another Ind AS. We will discuss that another Ind AS in very detailed form. Based on this discussion, now tell me, what is ESOP? Equity or liability? Huh? No, I am telling you the situation. In ESOP, company always offer the fixed shares. Actually, there is no variability. In ESOP, company always offer fixed number of shares. Tell me, what is this? Hence, the name is equity settled transaction. Understood or not? Now tell me, based on your common accounting sense, what is SAR? They're not asking full form. She's saying stock appreciation, right? What is SAR? What is SAR? I will give you cash. Are cash? It's a liability. Why equity? Tell me. Prove it. Why you said equity? Why SAR can never be equity. SAR can never be equity. SAR will always be a liability. Why? First of all, settlement in cash. This is a primary thing. First of all. Second, in SAR, you don't know. Now I am telling you. In SAR, the value of the cash is based on share price of not right now, share price of future. So the cash, I don't know how much cash I want to give. It is a variable. So it becomes a liability. So tell me, ESOP is SAR is ESOP is a equity settled transaction. SAR is a liability based transaction, cash settled transaction. Understood or not? We are starting equity settled transaction first. Which one? We are starting equity settled transaction. Guys, just give me 1 minute. Just 1 minute. Only one. Okay. Alright, guys. We are starting equity settled transactions. Means ESOP. Now, few more points are to be discussed, then we will write. Now, I am giving you the whole condition. Based on that condition, we will start understanding the accounting. The condition is very simple. Please listen to me. On grant date, I offered you. You have the calculator now? On grant date, whenever you required, please use it. On grant date, I offered you that I will give 100 shares to each of my employees. 100 shares to each of my employees. Suppose I have 500 number of employees. How many employees? 500 employees. Every employee will get 100 shares. Multiply it. You call it 50,000 options. What will you call it? 50,000 options. So how will you arrive the number of options? Number of employees multiplied by number of options per employee. What? Number of employees multiplied by number of options per employee. So this becomes a total number of options. Total number of options? 50,000. Now I derived the fair value of one option. You remember fair value? Fair value. Based on market price, excise price, RBI interest rate. I derived the fair value of this option, of one option, is 40 rupees. 4040. Tell me the total value of the offer. 50,000 numbers multiply by 40 rupees. Okay, how much? See, this 20 lakh is considered as an expense for company. As an expense for the company, it is considered expense for the company. Why? Because that much value I am providing to you. So this is to be presented under employee benefit expense in the P&L. P&L format we discussed. So this 20 lakh need to be presented in employee benefit expense. Now 20 lakh. Okay. Now suppose this ESOP is offered based on 3 years vesting period. Based on. So now you tell this 20 lakh is the expense for the company for only first year or for the entire 3 years. This is for entire 3 years. Very good. So should I record the expense proportionately or entirely 20 lakh in the first year? Proportionately. Very good. Okay. Suppose 20 lakh divided by 3. 6,66,667. So this is my first year expense. I want you to create entry, but before creating entry, think about salary. Think about salary. Forget ESOP for the time being. What is the entry of the salary if it is payable, not yet paid? Salary account debit to salary payable from company's point of view. And what is salary payable? It is equity or liability? Liability. Because to be paid in cash. Just like that. Now use your common sense. This 20 lakh or 6,66,667 is also my expense. And I need to discharge you after 3 years. What should be entry? Just like salary, what should be entry? Tell me, socho. Think. Salary account debit. So here, employee benefit expense account debit. 2, salary payable. It was a liability. Here. ESOP payable, the name could be anything. But what is ESOP payable? Liability or equity? Array, ESOP payable. It is equity. Where you will show the salary payable in the balance sheet format you have. Where you will show the salary payable in the balance sheet? Other current liability. Where you will show the ESOP payable. Take your time, but please take out your notes. Look at the notes. Take your time, but refer the notes at least before answering. Salary payable is clear. Other current liability. What about ESOP payable? Correct. Correct. Other equity. Why other equity? First of all, it is a equity settled transaction. Company have liability or company have equity? Company just will issue the share and shares are fixed. I cannot do share capital. I will do share capital when? I will credit share capital when? At the time of exercise. Till that period, what I will use? Other equity as a part of reserves and surplus. So tell me again. Now, final entry. What is the final entry? Employee benefit expense account debit 2. Now, let's name it as per ICI. Not ESOP payable, not reserve and surplus. Let's name it as per ICI. 2. Share based payment reserve. Share based payment reserve. Now you tell, because we have already understood the format. SBP reserve, share based payment reserve, SBP reserve in short. Where you will keep this SBP reserve? Okay, OCI. And OCI where will you keep? SOKI. SOKI. Go to your SOKI format. Go to SOKI format. Items of OCI and other, there were so many things now. You will keep that there only. Understood or not? Now please, before it's too late, let me tell you, item of SOKI are defined by Ind AS. That which one will go to SOKI or which one will not go to, sorry, SOKI nahi, OCI, sorry. Items of OCI are defined, predefined. Well, we cannot decide that we want it to go to OCI. So OCI items are predefined as per Ind AS. In this chapter, this SBP reserve is not defined for OCI. This Ind AS says, okay, it is a reserve. Show it even separately from OCI. Show it even separately from, but where? See, reserves and surplus has 3-4 heads. Reserves and surplus has 3-4 heads. One is capital reserve, one is security premium, one is other reserve. Other reserve could be DRR, CRR, general reserve, and now SBP reserve. There you will keep that. Not understood? Or not understood? So whether this SBP reserve is a OCI item, OCI has a predefined list. But this SBP reserve is a SOKI item, of course. SOKI. Because it is a equity settled. Entry is clear kya? What was the entry? Employee benefit expense account debit to SBP reserve. SBP reserve will transfer to SOKI. Balance sheet. Okay. Now employee benefit expense, where you will transfer it? P&L. So the next entry is P&L account debit to employee benefit expense. Got that? Okay, very good. How we derive 20 lakh rupees? Number of employees 500 multiply by number of options per employee 100 multiply by fair value of option. Now, important golden rule, important rule. In this equity settled transaction, fair value of the option will be taken only on grant date. Fair value will be taken only on. If after grant date fair value changes, ignore. You have to take fair value only on the, what fair value we have to taken? 40 rupees. Suppose after 1 year fair value becomes 45. Ignore 40 only. After 2 years, after 3 years. So every year you will book the expense as per 40. So what is the thumb rule? Take fair value on the grant date only. Understood? So tell me, my fair value is fixed. My number of options per employee 100 is fixed. But still my number of employees are not fixed. Because there was a condition, you need to serve for 3 years. And those offer was given to 500 employees. Suppose after 1 year, 50 employees left the job. Now how many employees remaining? Huh? Wait, don't use the calculator, wait. Out of 450 employees, I'm estimating that he's not actually watching. I'm estimating that out of these 450, 80 employees will go in the second year and third year also. How many employees? 500. Out of which 50 gone. They are not eligible. How many left? At the end of first year. How many left? 450. I am estimating 80 will go more. Estimated number of employees is 370. Multiply by 100. Numbers 37,000. What is 37,000? Name it. Total number of estimated options, not options. Still the second year and third year is still remaining. Total number of. So make a formula. Let's make a formula. सबसे पहले, first of all, number of estimated employees, number of multiply number of options per employee multiply fair value. Tell me, 14 lakh whole divided by 3, because overall 3 years are there. First year is done na, but forget about that 6, 20 lakh, forget about that. I want to record the expense at the end of the first year, not at the beginning of the year. So overall number of years are 3. And how many years lapsed? Completed into 1. Technically it's 1 number. 4 lakh 333. What you did? I think you did 3 number of employees. This is expected or actual? Expected or actual? Number ये 100 actual. Expected or actual? Actual. Whole divided by means wasting period. What is the formula? Estimated number of employees multiply by number of options per employee multiply by fair value per option whole divided by wasting period multiply by number of years lapsed. Tell me what is the value derived? $330. Is this the first year expense? Now giving you another second year estimation now. Okay, total employees were 500. First year gone. So actual employees were 450 at the beginning of the second year. 450, sorry, 450 at the beginning of the second year. In the second year, actual employees gone 30. So at the end of second year, how many actual employees are there? 420. Estimating 20 will go more. Right now estimating. At the end of second year, estimating 20 will go more. 400. So tell me, what about the second year working? Again, full formula. Tell me. Estimated number of employees that will be eligible. That means, what is the moral of the story? You will book the expense not as per total employees, as per the estimated eligibility. Book the expense as per estimated, multiply divided by not 2, still 3 into 2. Why into 2? Cumulative 2-year expense. Cumulatively 2-year expense. Just a minute, complete the formula first. Into 2 minus earlier expense. I will get back to current year expense. Have you got the point? Minus $5,73,000. Why it is not same as first year? Because of this. Why it is increased? Because we can see the increase in number of employees expectation, na? Very good. So second year answer is, you got the point? Last year. Okay. In the beginning, at the end of second year, how many employees were there? 420. 20 was the estimation of leaving, na? 420 was there. In third year, actual gone 15. 15. Actual gone 15. Okay. Now tell me third year expense. No need to divide by 3, na? Divide by 3 into 3, 1 in the same thing. Because now 3 years are done, na yaar? Okay. Minus. Only second year or cumulative? Of course cumulative. First year, second year, overall. It was 10 lakh. Okay, do it. 493, 333, 573, 333. No. The cumulative one, please. 10 lakh. 10 lakh. Now tell me. 5 lakh. 330. The third year expense. Understood or not? Tell me the entries. What entry first year I will do? Employee benefit expense debit. SBP reserve. Okay. First year amount, second year amount, third year amount. Tell me. 493,333, 573,333, 553, 334. This account will be write off in the P&L, but this won't be write off. Transfer to Soki. Huh? Soki. Other equity, can I say? So tell me, in the first year balance sheet, in the second year balance sheet, in the third year balance sheet, what is the difference of this SBP reserve? Difference means what is the balance? Sorry. SBP reserve balance in the first year, in the second year, in the third year. Please tell me. It is 493,333 balance in the first year. So now this plus this. Yes, 10 lakh in the second year. Finally, it will be 20. 1620. Final balance at the end of the third year is 1620 SBP reserve. How it is arrived directly with the calculator, with the help of calculator, how it is arrived? This one, 405 into 100 into 40. This is, I think, the same. Now, tell me, how many employees are finally eligible? Huh? Okay. After this 405 employees, I have sent mail to every 405 employees. Okay. Send mail and give them the 3 months time. What is that 3 month? And in those 3 months time, 390 replied with payment, and 15 employees ignored. They ignored the mail. Tell me, to whom I need to give the shares? Huh? 390? What about 15 employees? The offer is lapsed. But I have already created the reserve for them also. Technically, this reserve is for the 405 employees. But actually, I am issuing the shares to 390 only. What about the reserve belonging to 15 employees? What I will do? Reserve can never be write off. Till now, this was a specific reserve. Now it becomes free reserve. Transfer to retained earning or general reserve. What is retained earning and general reserve? It has a nature of free reserve. It has a nature of. So whenever any specific reserve has no use, you transfer it always to. It is a basic point. You need to write it in the basic part. You should write in the basic part. Whenever any specific reserve is not required, you can reverse it and directly transfer it to retained earnings or general reserve. Okay, I'll also write, don't worry. After leaving the pages for Ind AS. Point number 9. 9. We haven't given any point to formats. No? Point number 9. If any specific reserve is of no use, then it should be transferred to retained earnings or general reserve. Any example? Now we got the example, na? SBP reserve on on lapsed options. You understood lapsed options? In the CA intermediate also, you understood this thing. DRR, reversal in the retained earning. If you remember, DRR, debenture redemption reserve, you used to reverse it in the profit and loss or retained earning once the debentures are redeemed. Now it is of no use, so DRR should be transferred to P&L or general reserve, whatever. It's the simple golden rule of accounting. Whenever any specific reserve is not required now, transfer it to always to retained earning. It's a basic point. Okay. Coming to our main part. Okay. So can you please, guys, can you please bifurcate this in 390 and 15? Okay. For 15 employees, 60,000. And for 390, 15 lakh. How? Basically, you divided this into this like that, na? But I can say this 60 can be divided by this also, 15 number of employees, multiply by 100 options, multiply by 40. I think the answer would be same, na? Logically. Okay. Now, what journal entry I will do for 60,000? SBP reserve to retained earning. Yeah, journal reserve. Okay. Now, for them, no entry. Acha, let me give you some more information, because without those information you can't do the entry. The face value of the share is 10 rupees. The EP, yes, the exercise price 40. 40. What was 40? Fair value. It was the fair value. Exercise price, I'm asking 20. That means you need to pay me 20 rupees for every share. Now, work on the entry part, journal entry part. Okay, I'm just giving you the hint. See, whenever we issue the share, please, take the hint. Whenever we issue the share, whatever money we receive, bank account is debited. Whenever we issue the share, equity share capital account is credited with the face value, and the difference transfer to security premium. Here also we need to do this, but with one more thing, that now SBP reserve is also gone. When you were creating SBP reserve, you were crediting. Now, since it is gone, you are issuing the share, you are making settlement, reverse it. So now tell me what should be the entry. SBP reserve debit. How much? 15 lakh, 60,000. Any bank? Any bank? Are I'm asking for bank debitor or not? Yes, bank account debit. How much? Bank account debited. Guys, I have received 20 rupees from you. How many number of employees you are? 390. Multiply by 100. Multiply by 20. Hmm? 7 lakh? 80. 80,000. Okay, next. Face value with share capital. Share capital debited or credited? 2. Equity share capital. Only face value. 390. 2. Securities premium. Balancing figure. 19 lakh 50,000. More logical approach. Understood पहले? See this. Let's discuss the logical way. Can I say that it is derived with 40 rupees? See, in every amount, 390 employees multiplied by 100 is common. Can I say this is 40 rupees per share? Can I say this is 20 rupees per share? Can I say this is 10 rupees per share? So can I say this is 50 rupees per share? Now you will have one question in your mind, sir. Security premium, how 50 rupees? I just received 20. So how 50? No, I haven't received 20. I received the overall value of 60. Because 20 rupees I received cash and 40 rupees I received value from you. It was fair value. You remember? I received 40 rupees of services from you. So overall, how much value I generated from you? Out of which 10 rupees is what? The remaining 50 rupees is the logical way to explain, Nayar. So what is this 60? The value company received from the employees. Understood or not? And this value is received in two forms. One is cash and one is service, kind. Understood now? Understood the full accounting? That's it. This was equity settled transaction overall. Understood or not? We will write, don't worry, we will write. This was equity settled transaction. Tell me. Everyone, tell me. Clear? Sure? Now, before writing, let's solve this question. Can we solve it? Okay. If possible, don't open the book because the solution is also there. Na? So I don't have trust on your eyes actually. So just look at the board and start solving in roughly with the calculator. Please start solving. I will help you, don't worry. But first you will solve by yourself. I will help you. Okay, done. Company announced share-based payment ESOPs for its 150 number of employees on 1/4/23. Service condition is 3 years. Exercise price is 80. Okay. Each employee will be eligible for after 3 years service only for 100 number of shares. 100 is fixed. Fair value of option on GD grant date is 45. Fixed, but number is not fixed. Okay. Position on 31st March 24. Matlab first year ending. 8 employees already left the job. So what I will do? 150 minus 8. It becomes. And what is the estimation? Departure rate. Departure rate means future. They will go. 3% per annum for the remaining period. Per annum. Per annum. Means minus 6% or minus 3%, minus 3%. Both are different. Doing minus 6% is different from doing this. Which one? Minus 3, minus 3. Why? Why? 3% will go every year. Means in the second year, 3% will go from 142. And in the third year, 3% will go not from 142, from the balancing figure. That is the reason. So doing 6% is not good, is not fine. Understood or not? Okay. So what we will do, basically, this multiply by 100 number of options. Huh? I will suggest you one thing. Write in this way only. Do not write number of employees in points, in fraction. Because when you will do this, the number of employees will be in the fraction, na? Don't do it. Just do it and multiply 100, multiply by fair value. It will ultimately round off to the amount. Are you guys getting me? Okay, multiply, tell me. 45 divided by 3. What was the amount? Huh? 2 lakh. This is the answer. 2 lakh 412. 2 lakh 412. Okay. Entry is clear. Everyone, entry is clear. Huh? Okay. Now next, come to the next point. 31st March 25. How many left? So overall there were 150. Initially they'll 8 left. Then 6 left. Now remaining. What is the departure rate now? And how many number of years are still? Only one. So minus 2%. Now do not calculate number of employees exact. Just multiply. What? 100. 45 divided by 3 into 2 minus 2 lakh 412. Tell me how much you got. First year, second year. You got 199,428. Huh? Everyone is working now. Okay, 199,428. Entry is clear. Now, position on 31st March 26. Position on 31st March 26. Final is 129. Simple, 129. Tell me, 129 into 100, 45. Divide by 3 into 3. Minus First year and second year. That means minus 399. Huh? Please do your own working. So have you got the answer 18660? Okay. Entry same. Hmm? Now tell me the balance of SBP reserve. How much SBP reserve you have created? 2 lakh, 199, 180. Overall 5 lakh 80,500. For how many employees? Huh? 129. Now look at the point. Out of 129 employees, 4 lapsed proportionately. Proportionate calculation. Do. Huh? 18. 18. What will be the treatment? Transfer to general reserve. Transfer to retained earning or general reserve. Tell me, is this the entry same? Please look at the entry and working. Entry is fine. Now, for 125 employees, 129 minus 4. 125. Bank will be there. Arey, bank. Bank will be there with 80 rupees. Tell me the amount. Amount of bank. Amount of bank. 10 lakh. How? 125 number of employees multiply by 100 multiply by 80. Bank is 10 lakh. Let me check. Okay. Bank is 10 lakh. Okay. Now, SBP. SBP reserve. The overall SBP reserve was this. You have transferred 18. Now, the remaining part is 5 lakh 62,500. Okay. Now, the face value. Assume face value 10 rupees. If nothing is mentioned now, assume 10 rupees. So tell me. 125 multiply by 100 multiply by 10. 125. And the remaining balance is securities premium. What ICAI is doing, whenever ICAI doesn't mention any face value, they are not assuming 10 rupees. Whenever ICAI doesn't mention face value, they do to capital and security premium combine. Understood? No bifurcation. What ICAI will do? Guys, understood everyone? Shall we write now everything? Just a moment. Yes. Equity settled transaction. Let's start writing. So first of all, you have seen two examples, one in the class and one the practical example. What do you feel? The equity settled transaction, number of employees required, then number of options required, fair value required. And fair value, which date required? Grant date required. Understood? So these are the factors we know now. We need now. Okay. So please write it down. We have to calculate employee benefit expense. We have to calculate employee benefit expense of each year based on following elements. You tell the elements. Vesting period. Okay. First of all, what was the first factor? Number of employees. Can I say expected to be eligible? This was the first one. Second, I need number of options per employee. Third, fair value of option on grant date. And wasting period. Okay. How to calculate? How to calculate? How to calculate? Formula. Let me write the formula first, then you will write because of the space issue. Okay. You just tell me the formula. Number of estimated employees. Okay. Number of options. We will understand per employee. Okay. Multiply by fair value. Whole divided by wasting period. Sorry. Into period lapsed. Okay. Minus. Minus. In the first year, minus would be 0. In the second year, expense already recognized. Expense recognized till date. Now you can write. Now you can write. Minus expense recognized till date. This is the formula. journal entries. Journal entries. So journal entries at the end of each year. At the end of each year. During wasting period. At the end of each year during wasting period. What is the journal entry? Employee benefit expense account debit to SBP reserve account. And second entry, one more entry na guys, P&L. Profit and loss account debit to employee benefit expense. What about SBP reserve? The nature. What is the nature of SBP reserve? Is it a liability or equity? It is a equity. Why equity? Because fixed number of shares are to be settled irrespective of their value. Tell me na guys. So note SBP reserve is equity nature account because fixed number of shares will be settled irrespective of their change in value. Hence, it is shown under SOKI. Shown under SOKI. So at the end of each year. Now, when option is exercised after wasting period, when option is exercised after wasting period, what entry you will pass? SBP reserve debit, bank account debit to equity share capital to security premium. Here face value, here balancing figure, here, not here, fair value, can I say? Here, right. When option is wasted but lapsed. Option is wasted means wasting condition fulfilled by other employees also, but they lapsed, they ignored. So option is wasted means eligible, you are eligible, but you have ignored, you didn't reply to my mail. So option is wasted, you understood now? Option is wasted means you are eligible, but it is lapsed. What entry? SBP reserve debit to retained earnings. Or general reserve. There is one more situation I will discuss in particular example or question. When option is not wasted, when option is not wasted, option is not wasted means condition not satisfied. When option is not wasted, condition is not satisfied. But previously I booked the expenditure like this, but option is not wasted. What I will do? Reversal. What entry? SBP reserve account debit to employee benefit expense. Employee benefit expense account debit to P&L. Technically P&L. No need to transfer to general reserve. So entry. Tell me. SBP reserve. SBP reserve debit. Option is not wasted. SBP reserve is debited. 2. Not P&L. Don't use P&L. 2. Employee benefit expense. And then employee benefit expense debit to P&L. So can you please identify these last 2 points? Option wasted but lapsed and option not wasted. Can you identify these last 2 points? These last 2. In both cases, SBP reserve debited. But in one case, it is debited and credited to. You are not reversing your expense. But in the second case, company is reversing its expense. Why? Option is not wasted. Condition is not satisfied. That means I haven't received the value. I haven't received the service. But here, why I am not creating P&L again? I received the service. If I receive the service, I need to book the expense. Matching principle. Huh? I cannot reverse the expense because of matching principle. Your childhood days, matching principle. What is matching principle? Expenses should be recorded in the same period when you are getting the benefits. For that, if you have recorded any sale, that means you got the benefit. So to get the benefit, have you incurred any expense? Yes. The record the same with that match it. Understood or not? So why you are recording the expense in the first year? Because of matching principle. So what you are matching here? How to match the income and expense? You are booking expense. What is your income? The first year service you got. Because of first year service, your revenue might have increased na yaar. So matching principle we are following. So why we are reversing the expense here? Reversing the expense here. We haven't received the final services. So we haven't received the services, so there is no income. So why there is expense? Reverse the expense also. Understood now? So this was equity settled transaction for you. Will you change the fair value? Or you have to use the fair value only on the grant date? Note. Any change in fair value after the grant date shall be ignored. Refer practical example. Which example we referred? Practical example we referred now. Example number 1. Refer practical example 1. Reference is important, guys. Even when we will do some questions, we will refer here, that we can refer this question number for our exam purpose. Okay, guys, tell me till now, comfortable? Huh? Are you sure you are comfortable? Okay, so let us do one good question now. Open your question bank. Open your question bank. Topic number 17. It's 17.1. Okay. So in the index part, you can see 100 is the for basic questions. We'll do basic question later on, because this basic question are basically from supplier part. We'll do separately. Come to the 200 series, page number 17.4. 17.3, 17.4. Okay. So now in this series, there's a very good question recently asked. The last question. It was 214. Question 214. It was asked in exam November 24. In the page number 17.10. Can you see the question? Can you see the question? Okay, let's read the question first. Greater Limited, in order to reward its employees, launched a scheme effectively from 1st April 21. What is this? Granted. In which employees will be granted equity shares of the company at a price less than market price. What is this? ESOP or SAR? ESOP. Subject to the satisfaction of certain condition. Means vesting condition. Following details are provided to you. First, according to a scheme, each employee has an option to purchase 250 equity shares. What is this? Number of options per employee. of the company at 45 per share. Exercise price, not fair value. Arey yaar, read the line carefully yaar. How can you say it is a fair value? Each employee will get this at 45. What is 45? Exercise price. Provided that the employee does not leave the company for, what is this? Vesting period. From the date of the launch of the scheme, that is up to 31st March 24. Once 3 years are completed by the employee can exercise the option within 1 year. What is this within 1 year? Exercise period. The closing share price on the stock exchange on 1st April 21, that is grant date, is 91 per share with a face value 10. What is 91? It's not a fair value, it is market price. Fair value is still not there. A registered valuer has been appointed by the company who derived the price of the option at 75 using Black and Scholes model of the option pricing. Tell me. So don't be in hurry. Read the question properly. Please read the question properly. What is the fair value? What is the use of 10 rupees? Journal entry. What is the use of 91 rupees? Nothing. Accounting for accounting purpose, nothing na. Ignore. Okay. Now, D number point. There are 750 employees eligible for the scheme. Eligible for the scheme. At the 31st March 22. 31st March 22. What was the grant date? 21. Matlab first year ending. 25 employees left the company. Do it. 25 employees left the company. And further 35 are expected to leave over the next 2 years. Over the next 2 years. 690. Okay. 750 minus 25 minus 35. So you will book the expense as per 690. Don't calculate. Don't worry. Next. During 22-23, a foreign based company entered into the market and started hiring experienced employees, and therefore retention of existing employees has been problematic and high attrition rate is observed in the market. 275 employees gone, left the company during the second year. Tell me. So in the first year there was 750 minus 25 in the first year gone, and in the second year 275 employees because of the new competitor. And third year estimation is 135 will go. Tell me, this calculation on the second year will be based on 315 employees. Now lastly, as on 31st March 24, only 400 employees remained with the company. So last year working will be based on 400. Out of it, only 375 employees exercise the option. So out of 400, 375 exercise the option. Eligible are 400. Exercise 375. So what about 25? Lapsed. What about lapsed? Retained earnings. You are required to provide necessary accounting entries during the life of the share-based payment scheme to account for the scheme implemented by the company. What I will do, let's not pass journal entry. Journal entry will be your homework. Let's make the calculation as per ICI methodology. Can we do that? Let's solve the question only for the calculation purpose. Working note. Journal entry will be your homework. Okay? Okay. So I'm using different notes, not the summary notes. Not the summary notes. I'm using different notes for solving questions. Practice notes. So I'm using practice notes. What is the question number? Question number 214. Everyone have the question now? Hmm? Because you just need to give me the figures, information. Okay, heading calculation of employee benefit expense. Employee benefit expense. Particulars. How many years are there? Can you please name it first year? Which first year is this? 21. Okay. Okay. See, I'm solving this question. I know you can solve it by uh, yourself. But why I'm solving this question? Just to understand the ICI approach of solving. Okay. Okay. Now, can you please tell me the number of employees? Number of employees? 750, 750, 750. Okay. Now, please tell me actual left. Actual left. 25. Let's not do second and third year, first year only first. Right now. 25. Now tell me expected to leave. Expected to leave. 35. So please tell me expected eligible. Employees. A minus B minus C. 690. Now tell me number of options are there? Number of options per employee. 250. Now tell me total options. D multiply by E. 172 500. Now tell me fair value per option. Hmm? 75. Now tell me total fair value. It should be F multiply by G. 1 crore 37. It is a total value. Now, now tell me cumulative expense till date. Divide by 3 into 1 because only 1 year is now. 43, 12, 500. Based on 3 years. ठीक है? Now tell me expenses recognized till previous year 0. So now tell me current year expense 43 12 500. Done. Now please second and third year do your own. Now write and solve both, do both the things. Anyone calculated the second year? Three negative. I was waiting for that. 375 negative. Yes. So what does it mean? Yes. Reduction of SBB and rate to P&L. The last one. Wasting condition not satisfied. So technically for some employees, wasting condition not satisfied because so many employees gone now. See, 275 employees gone. For those employees in the first year, I was expecting that I need to give them the share, but they gone. So their wasting condition not satisfied. So hence the answer is negative. Understood? So have you calculated? So please give me the figures. Second year figures, please. Actual left. 300 till date. Yes, till date. Okay, one number of employees 315. Options 250. Total options 78. Fair value cumulative total fair value 59 lakh. See, earlier company was estimating 1 crore 29 lakh. Now because of so many employees left the job, only 59 lakh of expense our company is expecting. Now cumulative expense till date 39 lakh 37,500, but we already recognized 43 12 500. So tell me 3 lakh 75,000 negative. Negative. Done everyone? Third year left. Direct 400. Okay, dash dash सीधा सीधा. Yeah, expected eligible, actual eligible 400. Done. So we can do here, we can do 350. Here 0. Okay, number of employee options, total options 1 lakh. It becomes 75 lakhs. Now cumulative 39 37,500. No, no. Hmm? Exact. Here 75 lakhs. And expense recognized till previous year 39 37 500. Tell me 35 500. Tell me for this what journal entry we need to pass. In the second year, we will pass SBB reserve account debit to employee benefit expense, then employee benefit expense to P&L. You remember that part? So in my summary notes, can I refer for this? Can I refer question? Refer question number 214 for this part when option is not vested. Question number 214. Option is not wasted. All right, guys. So have you understood this now? The remaining part will be your homework. Homework, which part? Journal entries will be your homework. Okay. And few more questions I am giving you in the 200 series only. I am giving you few more questions as a part of the homework. This 210 homework. This 213 homework. 210 213. Done? All right. So guys, let's conclude the session today. है ना? Okay. So before concluding the session, let's have a quick recap. Can we quickly recap all the things? Okay. In Ind AS 102, what is the name of the Ind AS 102? Share based payment. So what share based payment do? Basically any payment made in the form of shares or in the form of cash, but the cash value derived from share is called share based payment. Two exceptions. Right issue to employees is not covered. Share issued against business acquisition is not covered. Okay. What is grant date? Offer date. What is vesting period? Grant date to vesting date. What is vesting condition? To be fulfilled by employee to be eligible. Okay. When the employee will be eligible? After vesting date. Okay. So expense need to be booked. When? During vesting period. During expense to be booked based on which price? Excise price, market price, or fair value? Fair value of which date? Any change after grant date? Ignore. Okay. Next. What is SBP reserve? Equity. What is SBP reserve? Equity. How to calculate the expense? Formula? Number of expected eligible employees into number of options multiply by fair value per option divided by vesting period into number of years lapsed minus cumulative expense recognized in last year. Okay. What is the first journal entry of expense? Employee benefit expense account debit to SBP reserve. Second journal entry, P&L account debit to employee benefit expense. SBP reserve will go to SOKI. Everyone? What is the journal entry when you will exercise the option? Issue the share. Issue the share. SBP reserve with the fair value. Bank with the excise price. To share capital with the face value. To security premium with the balancing figure. If the face value is not given, to equity capital and security premium combined. In this question number 214, face value was given. Okay. What will be the entry in case option is wasted but lapsed? Option is wasted but lapsed. As we reserve to retainer. What will be the journal entry in case option is not wasted? As we reserve account debit to employee benefit expense. Employee benefit expense account debit to P&L account. Guys, understood or not? So till now we have discussed this much of the part. Are you guys understanding or not? Completely understood? Okay. Thank you so much, guys. We'll meet tomorrow in the tomorrow's session. Okay. Same timing. Till now, thank you so much. Bye bye. Take care. Bye bye. Just a minute. Okay. Online students, bye bye.